Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, as we look back on the month of November, which we're going to complete today, we had a 6.8% rise in the S&P and the NASDAQ, and the big winner last month was the Russell, up 16.65%. I've been talking about this rotation that's going to happen as the markets go higher, and the only way they would go higher is for this rotation to happen, and we've seen just that. We've seen record closes across the board now. But this is the final trading day of November, and the most important thing to understand is we're entering the final month of 2020, which has to be by far one of the craziest years that anybody has lived through. For us modern folks, this is pretty much it, and I've been around for a few days. So as we come into this final month, this is going to complete all of this craziness, and we're going to wrap it into the final month, deciding on what the markets are going to look like going forward for 2021. Now, we're seeing a lot of things come out, as it looks like Biden is going to pick Janet Yellen as the Secretary of Treasury. Now, I used to call her Grandma Yellen. She's almost like the fairy godmother in some of the Disney movies, as she has a magic wand, and she'll wave that wand around and help the equity markets to move higher. So a lot of enthusiasm that we've seen has been because of this particular appointment. I'm not a big fan of Janet Yellen. She was the most dovish person on the board when she was there, and when she was chair, she was even more dovish. She was one that advocated for the Federal Reserve to be able to buy equities like they did in Japan. So anything's possible. The gloves will be off as we go forward, and we'll see if we can start to get close to any kind of stimulus deals, all kinds of things that we've seen. Now, last week, we have to admit, this was about the COVID vaccines, plenty of that news out there. And it's amazing, they're talking about vaccines that are 90+ percentile effective. This is unheard of. I've never heard of those kind of numbers. Even back in the days of polio and other types of vaccines, you just don't see that kind of number. So it's amazing they've come up with these numbers. You know, we live in a time, I've talked to a lot of my friends, and I've probably made these comments on live streams, as we live in a time where it's almost impossible to figure out what's real or true or isn't. And so we'll just have to step forward. The important thing from the viewpoint of investing is how the markets perceive what's going on. As we look to this week, we've got a lot to digest. We have the final round of earnings. There's roughly about 180 earnings reports coming out. We have a lot of major players coming out that are likely to continue to keep that earnings background going. This will be the final week, as it will wind down substantially as we come into the second week of December. As we look at the economic reports that come out this week, there is a ton of them. We have Chicago PMI and housing sales coming out on Monday. On Tuesday, we have ISM manufacturing, and that's likely to be material. I think folks are still watching these numbers really close. Of course, on Wednesday, we'll have the ADP numbers to come out. They're expected to show 360,000 increase. On Thursday, we'll have our typical claims. They're expected to uptick again to about 758,000. The continuing claims number came in at 6.1 last week. I'm looking for a number under 6 million. I'll update this as we get closer to Thursday as I get a better feel for these numbers, but I believe they will come in below 6 million. On Friday, we'll have non-farm payrolls coming out, expected to come out around 525,000 increase. Unemployment's expected to stay unchanged at 6.9, and some of the other metrics may come in and suggest there's some slight improvement in the economy, but it is starting to flatten out a little bit. I thought these numbers that we're seeing now would be more evidence as we came into October and November. They're just now starting to show up in these metrics. Also, there's factory orders coming out on Friday. I don't expect this to have any material effect. But as we come into this first week, this will signal how we're likely to trade for the rest of the month, in my opinion. I believe we will see a continuing pattern to the upside as the markets unfold as we come through this week. But there will be some critical numbers that I'll cover in the technical section here in a few minutes, as we're continuing to see a lot of traction come into our database. So this thing is still rotating. It's still getting stronger from the number of trends that are being detected by the WaveTech models. Let's go ahead and take a look at the charts and see what they're telling us for Monday. As I begin with the WaveTech Database review, we are continuing to see quite a bit of traction. Now, the intermediate models are up to 68.96% long. This is continuing to expand by about 400 net. There were roughly 500 new buys between the weekly 1.2 and the weekly 3.2 models, pushing the bullish percent up to 68.96%. Now, I mentioned this last week that typically we will get up to around 72 to 78%, but the thing to watch for on these intermediate models is over on the right, where we're looking at the duration fulfilled, and that is the optimized weekly. The duration fulfilled is about 23%. Basically, a quarter of the duration has been fulfilled. So there's about 140 to 160 days forward looking in these trends that are being identified. And right now there's 11,323 trends that have been identified. And this is suggesting that a lot of forward-looking returns are yet to be realized before this market will be ready to roll over on an intermediate basis. As we go to the daily report, we have 12,636 short-term trends long, or 76.93%. Now, during the year of 2020, we've actually seen this number get above 90% twice and then pull all the way back to 8%, and now it's refreshed and it's been climbing steadily back toward the 80 percentile range, and I expect that will continue to see some positive rotation, as there's a lot of things that are starting to rotate in because of the rotation that we're seeing in the Russell and the mid-cap asset classes. This was likely to continue to see traction come back into the market on a short-term basis, and this has already been evident on the intermediate. The first thing that I want to talk about is looking at the Russell versus the NASDAQ. Now, I mentioned in the opening comments that the Russell was up over 16.5%, while the other indices were up roughly 7%. You can see that illustrated here on this chart. Now, weekly graph, what you'll see here is this is just the beginnings of a turnaround in the spread. Now, this spread has been underperforming, or otherwise the small cap stocks have been underperforming going back to 2017, and this has been exaggerated. Now, this was portrayed by many folks out on the street to be a negative, when in fact it is a positive of what's been happening. Because what my expectations are here is that we'll see a rotation back into these secondary stocks, which will indicate in this current environment that the economy is going to continue to come on, whether it's based on a vaccine or whatever. This is the perception that the markets are starting to put out there. As we look at the Russell, it did get an RXT sell 2 days ago, and we did see a basically sideways pattern, but the configuration suggests we're likely to see one more day of sideways movement. The PPMs are confirming this strength as we look at PPM 1, 2, and 3. The likelihood of a S1, S2 print today is about 60%, so look for a move downward towards 1843 with a potential of 1836 being the low. On the upside, 1861 will be your pivot, and then 1867 will be the key level on the upside. The weekly chart continues to show that we're seeing a massive acceleration, are worried about that the Russell has gotten ahead of itself. Now, we have had 5 bars up, so depending on how we trade, if we cannot trade above R2 early in the week, then we could start to see a 2 to 3 week sideways movement and move back into a minor correctional phase on this market and start to see some consolidation up here. However, if we can get above R1, 1873, then we're likely to see an R2, R3 number, which would put us over 1900. And that will also suggest there'll be a sharp acceleration to the upside. The next market that I'll cover is the S&P 500. We have seen quite the range so far overnight. 3652 has been the high, 3623 has been the low. As we look at the market grid, 3625 is S1. We've traded at 3623, so we printed an S1. On the upside, 3652 is just above R1, so we've already had an S1, R1. My expectation is that we will see the potential for an S2 print, 3614. The PPMs are starting to roll over a little bit. We're seeing some minor weakness, and I do expect to see the 10-period moving average come into play here, which is 3602 on the futures. If we can hold that level, then that will be a good testimony for the market to make a reversal and move higher as we come into the key metrics that are going to be released as we go through this week. As we look at the S&P cash daily, one of the key things to watch here is that the market grid is contracting substantially, which suggests that the market is becoming somewhat vulnerable to some minor downside. The 10-period moving average is at 36.98. That is going to be a key number. It's up at 0.28. That suggests that there's only a 40% probability for it to decline under that number. This is 38 handles below where we were trading on Friday. As I mentioned in the futures, I'm expecting to see some weakness early in the week, but this number should hold. That 3600 level is going to be the key support to watch as we come into early in the week. Now, the PPMs all look like they're expanding. Everything looks positive from that standpoint. But we did get that RXT sell just 2 sessions ago, and this is part of that sideways to down pattern, which should complete today, and we should start to see a resumption of the market moving up toward the upper end of the market grid, but it has narrowed down a lot. So this is suggesting volatility is collapsing and that there is vulnerability to the downside. Now, we're still well above the numbers before there's a trigger on the daily range indicator, which is below 10. We're currently looking at a 40 handle average range right now. We're a long ways from getting anywhere close to what I call a low volatility trigger top, where volatility just collapses, the markets go sideways or get very narrow, and then they roll over. I don't see us at that point. We're going to probably test 3600 level that I mentioned a minute ago, and that should hold. As we go to the weekly chart, the weekly grid, you can see the R1 is 3662. That will be a new high. We saw a high of 3644.31. If you recall, 2 weeks ago, we had a high of 3645.8. So we still have not rendered a new high. This was a new closing high on a weekly and a daily basis, but we still have not rendered that ATH, or the all-time high, from a price standpoint. I do expect that will happen. As we look at these weekly PPMs, they're all above their first and second derivatives, and they're all in trend mode, and they're also in a robust trend mode. So there's very little potential for the downside. That's why it looks like the 3600 level will be the key this week. NASDAQ futures are up 14 handles. Very quiet session so far overnight. The range so far has been 12,337 with a low of 12,253. So we are seeing a pretty narrow range on a relative basis. But we are seeing also the PPM1 and PPM2 down here are trying to roll over, and this is playing into the narrative that I talked about in the S&P, that we're likely to see some potential weakness early in the week, primarily Monday and Tuesday, and we should play this thing out and see it set up against some key support levels. Now, the 10-day moving average on the NASDAQ is 12,043, and that is moving up about 40 handles per day, so that'll be 12,080 plus, and that number will be moving up underneath this action. And it's going to be key that the PPM1, which is currently 0.28, remains above 0.15 over the next 3 sessions. If that occurs and we hold the 10-period moving average during this period of time, we should see a rebound and start to move back up toward the upper ends of this range. As we go to the market grid on a weekly basis, we're going to see that R2 is 12,540. We've seen a 12,337, so there's at least an R2 number out there on a weekly basis. R3 could play out 12,689. I think that'll be lower in a week. S1, 12,124 will line up perfectly with the 10-day moving average, and this should be major support. So S1, R2 on a weekly basis on the NASDAQ is the target range. The final market that I'll cover tonight is gold. Gold continues to be in a sharp downtrend. In spite of the weaker dollar, it's not able to find any kind of support. It's almost as if Bitcoin has replaced gold as a player for protection, as many folks had thought that it would. But what we're seeing here in gold is it continuing to print down to 1773. So we look at the market grid for today. S2 is 1770. The low's been 1767. S3, 1761. STX, 1753. R1, 1796. The high, 1793. We've already printed tonight an R1 S2 level. I expect we'll see at least an S3, maybe even an STX number. There appears to be an acceleration going on. We now have PPM1 at a minus 0.64, PPM2 at a minus 0.25, PPM3 at minus 0.18. These are all in trend level, which suggests that this market is not going to turn around here. We're probably going to look toward some lower numbers around the 1725 level. As we go to the weekly chart, you'll see that the S3 on weekly is 1719. STX is 1697. This market, as I mentioned, is in a pretty substantial downtrend, but we are starting to see a sign of hope that we will hold some support levels that are important. Now, S1 on a weekly, 1766. So I'm going to target S1 to S2, 1766 to 1742 as being major support. R1 is going to be major resistance, 1809. If we get above that, we could print an 1833 level. We are seeing the PPM start to turn up on PPM1 and 3. PPM2 is still under pressure, but this is a reasonably positive sign, but nothing extremely positive can come out of this market. It will take at least 2 to 3 weeks of price action down at these levels and trading below the 1820 level for this market to set up any possibility of a low. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.